Gold and silver are fairly safe bets, though, because we got 3,000 years of history and we know how it's working. And a lot of countries are either instructing their central banks to buy a lot of gold right now. You could see gold go to $10,000 an ounce and silver go to $200 or $300 or $400 an ounce when the panic buying really gets going, when they're afraid of the currency that the government is running into the ground. And historically, again, for 3,000 years, those things have always held their value.
Recent developments in the gold and silver markets have been noteworthy. In August 2024, gold surged to new all-time highs, reflecting a strong market sentiment and various global factors. Silver, meanwhile, has experienced more volatility, with prices fluctuating yet remaining supported by industrial demand and its role as a safe haven asset. This upward trend in gold is particularly evident in regions like Asia, where demand for physical gold, such as bars and coins, remains robust. According to the World Gold Council, gold prices hit record levels in Q2 2024, driven by a combination of investment demand and central bank purchases. Although consumer demand in the West has softened, increased investment flows may continue to bolster gold prices in the coming months. With economic conditions becoming increasingly uncertain, the rush to safe haven assets like gold and silver could intensify. This aligns with John Rubino's warning that prices may skyrocket as more people seek to protect their wealth. John Rubino is an American thought leader, former Wall Street analyst, and author of 5 investment books. He predicts that gold could surge to $10,000 per ounce and silver to $200 or even $300 to $400 per ounce once panic buying truly takes hold. Central banks continue to play a crucial role in the gold market, although the pace of purchases has moderated. Notably, the Reserve Bank of India recorded its largest gold purchase in 2 years, while private sector demand, particularly in the form of gold ETFs, remains robust. The reduction in India's import tariffs on gold and silver is also expected to boost demand for both metals. Rubino also highlights the growing accessibility of gold in places like Costco and Walmart, where consumers can now purchase gold bars and silver coins online or in-store. This trend reflects an increasing realization among individuals that precious metals offer a reliable store of value, significantly as economic uncertainty increases. Before we explore further, be sure to subscribe and click the bell to stay tuned for more engaging content.
Gold and silver are always the thing that people own when they're afraid of the currency that the government is running into the ground. And historically, again, for 3,000 years, those things have always held their value. Now, today you've got cryptocurrencies like Bitcoin that have a lot of fans who claim that Bitcoin at least has that same characteristic, that it's rare, it's fungible, it's safe, and because of that, it will hold its value along with gold and silver. And I'm agnostic on that right now because I'm just not technical enough to be able to make a determination about whether that. Gold are fairly safe bets, though, because we got 3,000 years of history and we know how it's working. And a lot of countries are either instructing their central banks to buy a lot of gold right now. Central banks are net buyers of gold, and individuals in other countries are just buying gold like crazy. A couple of examples. In South Korea, they sell gold in vending machines in like convenience stores. And those vending machines empty out within hours or just a couple of short days after they're filled up. So there's huge demand among individuals for small gold bars. And in Vietnam, the consumer demand for gold was so intense that the central bank had to step in and sell some of its gold in order to create enough of supply in the country to keep prices from spiking to unrealistic levels.
I heard that Costco was selling gold.
Costco is, and so are Walmart. So is Walmart.
Walmart too.
Yeah, but Costco is selling a couple $100 million worth of gold per month, which is over $1 billion a year.
Wow.
And so gold is, in that sense, it's becoming an impulse buy. You can just see I was in Costco a while ago, and they had a flyer pasted to the checkout stand. And it was a flyer reminding us that we could just have the cashier add a couple $1,000s to our bill for a gold bar and pick up that gold bar on the way out.
Yeah. So they sold it 1 ounce? Were they selling it in 1 ounce?
1 ounce gold bars. Yeah.
Really?
Yeah.
Wow.
And you can also buy silver coins on Walmart.com and Costco.com. And I tried the Walmart.com thing, and it's as easy as buying anything else on a high-end website. You just go in, you put it in your basket, you give it your credit card, and they send you some silver coins a couple of days later. So individuals are taking advantage of these various opportunities to buy gold and silver, and they're doing that because that's a place that people hide out. It's a very normal impulse. And as more and more people figure out, they'll hear a show like the one we're doing right now, and they'll think, oh,
sure.
so that's something I can do easily. And it's a start in protecting myself. So when you get to the point where everybody has this idea and they're all starting to try to get through that little precious metals door, and there's this huge rush to buy gold, buy silver, and people are willing to pay anything for it because they're panic buying. And you don't want to be one of the buyers when that happens. You want to be one of the people going, hey, I've got some extra silver coins here at $120 an ounce if you want some, and so it pays to be early before runs start in, assets of any kind. That was, it was good to be an owner of NVIDIA 5 years ago. And it was good to be an owner of Google stock 15 years ago. And gold and silver are kind of in that ballpark now, where they're becoming assets that are rare and highly desired, and because of that, people will pay panic prices for them. And when the rest of the world turns Japanese, that's when that will happen globally, and we're not that far from that.
The metals market has been highly volatile this year, with significant movements in gold, silver, and copper. Copper, in particular, reached an all-time high in May 2024, but has since dropped by around 20%. This spike in demand was driven by its critical role in producing AI chips and electric vehicles, leading to a record level of participation in COMEX copper futures as traders anticipated potential supply challenges. Silver has also seen strong demand, surpassing supply for 3 consecutive years. The Silver Institute expects another market deficit in 2024. Additionally, research from UNSW scientists projects that by 2027, solar manufacturers will need over 20% of the current annual silver supply. By 2050, the production of solar panels could consume 85 to 98% of the current global silver reserves. While these projections may seem concerning, John Rubino views this scenario as a significant investment opportunity. As the scarcity of these key metals continues to drive up prices, early investors could realize substantial returns. Now let's delve into the video.
The longer term story is that we have screwed up our financial system on such an epic scale that, that the longer term story for the real assets that will protect us from what's coming, the longer term story is phenomenal. You could see gold go to $10,000 an ounce and silver go to $200 or $300 or $400 an ounce when the panic buying really gets going. And you could also apply the same logic to things like copper and uranium, because there's another part of this story, which also involves silver, because silver is part of this new story that I'm going to tell you too. And that is, we're trying to electrify the world. And we're doing that partially with lithium-ion batteries, but also with solar panels and power lines and nuclear power. And all of these things need lots of copper for the wiring, lots of silver for the microchips and for the other, energy transportation technologies that we have, and uranium for nuclear power. And there is nowhere near enough of any of those things in the world to allow us to reach the levels of electrification that we're aiming for. Solar panels are being slapped up everywhere in the world, and each solar panel includes a little bit of silver. And the newest generation of solar panels includes twice as much silver as the older generation. So the solar panel component of silver demand is spiking, and there's no extra silver to cover that. And on the artificial intelligence side of the story, AIs are being built by basically, it seems like everybody in the world, and they need special chips for that. And those chips are energy hogs. And somebody did an analysis a while ago where they calculated how much energy would be needed for 1 year's chip production from NVIDIA if they were all plugged in and running. And that amount of electricity equals about what Ireland uses in a normal year. And that's that's one company producing chips, and in a world with multiple chip producers out there and multiple years for this build out to take place. So there's no way in the world that we have enough copper and silver to feed that dragon, and nuclear power, because all of these things need power that doesn't now exist. So we're going to have to put nuclear plants everywhere you look and slap solar panels on everything imaginable. And we're still going to come up way short. But along the way, the price of the metals that are needed to keep us moving along that growth curve are going to go up, because that's the only way you get new copper because we're mining all the copper that can be mined at today's price. So the price of copper has to go up to 2, 3, 4 times today's price in order to bring currently uneconomic deposits online. And that's just all there is to it. So even if silver wasn't a monetary metal, it's because right now it trades along with gold in a lot of ways. People use it as money, but as an industrial metal, if that was its only story, it would still be a spectacular story, because it's incredibly cheap compared to what it has to be for us to get that silver from somewhere, and it's not even clear we can do it at all. But for us to even take steps in that direction, the price has to go up. So that's why, all this gloom and doom stuff can be scary, but it's also a really exciting investment thesis.
Historically, commodities are typically seen as hedges against inflation. The world is in flux. As traditional financial systems face unprecedented challenges, gold and silver emerge as a beacon of stability. As the world grapples with economic uncertainty and geopolitical risks, investors, central banks, and nations are turning to this precious metal as a hedge. Is gold poised to reclaim its throne as the ultimate store of value? Your opinion matters. Drop your thoughts in the comments, hit the like button if you enjoyed this, and subscribe to stay informed on our journey together.